this is not what I think happened. I don't think that these guys went out of their way to help their former employees, as a lot of the employers, as a lot of I think some of the conspiracy theories are. But what I think it did reflect, and what I saw, was a deep ideological capture. And when you come from Wall Street or from these institutions, many of which were, of course, responsible in large part for the financial crisis, and you bring that mentality with you, you identify with those institutions. And you don't necessarily identify with those outside of that bubble. And people outside of that bubble, like myself or Elizabeth Warren, were derided as being stupid or unable to understand the intricacies of these issues because we didn't have a background at one of these institutions. And it sort of expressed itself. I'll just give you a couple of quick anecdotes. When I first got down and started seeing some of these conflicts of interest and some of the vulnerabilities to fraud of a program that had absolutely no strings attached originally when I got down there. And one of the things I was told over and over again was to acknowledge the problems, the vulnerabilities. But the explanation was, Neil, you don't need to worry about it. These are banks. They would never risk their reputation by putting profit over the public good. And this was shocking to me. I mean, guys, did you see what happened in the last couple of years? Why we all have these jobs? But it really is a very Greenspanian approach to market regulation, that reputational risk is all you really need. And that concept endured through the financial crisis. And let me be very clear, this was not just the Bush-Paulson people. It was an unbroken line between them and the Obama-Geithner people. It was the same lines. Another example was the TALF program, which I think with this crowd I don't have to actually explain what it is. But the TALF was a program to help bring back the asset-backed securities market in consumer loans. And I was dealing with the Fed, and I couldn't understand there was no taxpayer protection for this $200 billion announced to be a $1 trillion program. And so I asked, I'm like, I need to talk to someone from the Fed who understands this program. It's a Fed TARP. So I got on the phone with someone who I didn't realize who it was. It was Bill Dudley, who was then is now the president of the New York Fed, also an alumni, of course, at Goldman Sachs. And I said to Bill, where's the taxpayer protection? And he said, oh, don't worry, we got it handled. We're going to rely on two things: investor due diligence, because these were going to be 95% non-recourse loans for these things provided by the government, investor due diligence, and credit rating agencies. We're going to rely on the credit rating agencies. They're going to have AAA ratings for these bonds that we're going to put 95% of the taxpayer up to $1 trillion. And I said to Bill, seriously, really, it was not my most professional moment. You're going to, after everything that just happened, after we know that these companies have sold their souls for a few basis points of profit, we're going to bet $1 trillion of taxpayer money on them? And his response to me was, we're very confident that they, quote unquote, will never embarrass themselves again. And that is sort of the enduring deference and, I think, ideological control of the people in Washington. And it's why they fought so hard against efforts to break up the big banks. And it's why you see so many of these policies that were so bank-centric and really literally shoved to the curb those other really important Main Street objectives. So before I stop, I guess the one question I should answer is, so what do we do about it? I guess I do have some responsibility to actually